Hello traders and investors in India, users of the Strike.money platform. Welcome to a new video on RRG and how to use it on Strike. Let's start with a look at the relative rotation graph for sectors, for Indian sectors. And I have loaded up the weekly RRG because we do this once every 2 weeks, so weekly seems to be a good time frame to work with. And if you look at the spread out of all the sectors, you can see that it is pretty evenly spread out. In the end of the day, all these vectors from these endpoints measured back to the benchmark should resolve into zero because it's a closed universe, which means that all the sectors are in the benchmark. What I want to talk about today or highlight or touch on is what the position of the various tails, what the position of a tail means for the expectations. And especially with regard to the position relative to the benchmark. And the rule of thumb is that the further away a tail is from the benchmark, the higher the potential alpha. Because what that means, if a tail is far away from the benchmark, it means that it has deviated a lot from that benchmark. So, if you think in terms of mean reversion, that means that that sector or that stock has a lot of opportunity to come back and cross to the other side. On the other side, when something is very close to the benchmark, it means that it is moving in line with the benchmark. So stuff that is very close to the benchmark is hard to use to create outperformance or find really good trading opportunities because they will very likely move in line with the benchmark. Now let's take a look at what we have here on our hands, and there are a few interesting tails. The one that I want to highlight is the media sector, and if you look at it here, you see that it is rotating back down and has just started to move back to the left, and we know that that is a negative rotation. What it basically means is that we're starting a new down leg in an already established relative downtrend. Now you see that we're very close to the benchmark, so at the moment it is moving in line with the benchmark, but it's pointing to a negative direction. And you will see that when we bring up the chart for the media sector. You can see how this ratio line, which is what the RRG is all about, is almost flat. It means it's when that line is flat, you move in line with the benchmark. What it also suggests, and I got to zoom out a little bit to make that visible, is that you see that relative downtrend that's already in play. That was already picked up by the RRG chart a while ago because it was already on the left-hand side of the chart. And you can see that now after this move sideways in line with the benchmark, the big risk, and the RRG lines are picking that up, is that we will start a new down leg in this already established downtrend. So what should you be looking for? A break lower below this, out of this range in terms of relative strength, and that will very likely happen when you see a peak coming into place in the price chart. Another sector that I want to talk about is consumer durables. If we look at consumer durables on the RRG, you see that it's way to the right, and it's in an opposite rotation of the media sector. If we just grab that here, you can see how that has rotated through leading, went through weakening, and now crosses back into the leading quadrant. That's the opposite. That's starting a new leg in an already established relative uptrend. And if we look at that on the chart, you can see that that's exactly what this is doing. Here you see the turnaround, and this is the little hiccup going from, so here we're in leading, we go through weakening, and now we're picking up again. So this is a continuation of that relative uptrend for the consumer durable sector. And then two that are interesting is CPSE. And why is that? And look at where CPSE is on the chart. So it's inside weakening, but it's rapidly heading towards the lagging quadrant, and the tail is increasing in length, which is indicating that there is getting more power behind the move. And if we look at the chart here, you can see that this looks very toppy. And look at the relative strength line, the raw RS line. That has already peaked. It's created a peak. If you would draw an imaginary trend line here, that's broken. So that peak is probably getting in place, and I would look for a break lower below this, short-term support level. But look at the price chart here. You can see how this is pretty toppish behavior. So watch out with the CPSE sector. And the other one that we want to look about is oil and gas, and look about that on the RRG. I need to zoom out where that is. So here is oil and gas. Look at that. It's almost a straight line from leading, short stint in weakening, and then straight into the lagging quadrant. And if you look at the price chart and the combination with the relative strength line, you can see how relative strength has completed a double top formation, and the price chart is still holding up well. But when you will see price declines and breaking off support in combination with this sort of weak relative strength, that tells you something, and the RRG lines are picking that up and suggesting that the oil and gas sector is now starting a new relative downtrend versus its benchmark. Thank you for watching, and I'm looking forward to seeing you again in 2 weeks' time, same place.